Hello, fellow traders. 'Tis I, the Rumpled One, coming to you Friday, November the 27th. The year's 2020. Let's talk trading. It's time for the weekly wrap up. Hope everybody had a fun and safe holiday. You got enough turkey. And if you didn't celebrate Thanksgiving, I hope you had a nice day anyway. So let's go ahead and take a look at some things, and just remember these videos are for educational purposes only, and your results may differ from mine. All the gaps filled this week, so I hope you fellow traders had an opportunity to take advantage of that. As you can see, it price jumped out of the opening range, or pretty much stayed out of the opening range for the year. That first day of the year, we're 60 pips above the yearly open, and we are 17 pips above the weekly open. You can see we're 92 pips off that weekly high. Once again, 61 pips above the open. A red day, second red day here in a row. It's like taking out the gains for the week. The inside bar, we had an inside bar here, 3 days ago. You see we busted through the high each of these 3 days here. Barely today. We touched the low. Looks like trying to break out of that low once again. Today's range, only 88 pips, only 4 pairs above 100 on range, and they're all pound pairs. So there's movement in the pound today. Pivot point was close to the open, so there was no bias. And if you took the short, you probably scratched or took a loss, got stopped out here on that first trigger on the long side. There were pips to be made. Right now we're in the rat zone. As you can see, red rats pushed the price down. Green rats, this was a rat zone, a low of the day, another low of the day, and then another low of the day. And price has been moving up off of those lows. You can see a couple of huge, big candles here. I like to call these return bars, meaning price is going to probably want to return to this level. And as you can see, it did. So this, I wouldn't call a return bar so much because of the length of the wicks. You can see this has very short wicks. This has longer wicks. That's just something I like to look for when I trade. Recognize price might want to return to that level. This level, it'll probably return there, but once again, it may not. We don't know. And that's the one thing about trading. You can look in the past here and you can say what you want, hairy hindsight, 2020. But what happens moving forward, your guess is as good as mine. One thing, based on statistics, price will probably close above this 13 level here, 20 pips or better off of that daily low. Once again, that's just based on statistics. Let's see if we can get a tick to update this chart. I like to look at the H4 chart here showing what happened during the week. Once again, we took out the pivot. The weekly pivot looks like we missed. Yes, we missed that weekly pivot by 9 pips. So we'll see if that gets taken out later. You can see we only had a few missed pivots this year. the wick zone, price in and out of the wick zone. Right now, you can see we're flirting with that double O, 3,300 level. Sometimes in the olden days, used to love trading that cross, looking for 1 to 5 pips on that trade. Looking at the ranges for the day, and you can see we're only at the 25% level on the range. 4 days ago, we had a nice range of 134, but since then, we haven't even hit 90. Close, but no cigar there. And here, once again, over the past 4 days, you can see each one of these was greater than 20 pips close minus the low, and greater than 20 pips high minus the close. Meaning if you got in the rat trade by the end of the day, or at the end of the day, you could have exited with a profit. That's what we're looking for with these rat trades. Also, one other thing about the rat, let me go back here. And if you look, we had some, I think I showed you this earlier. See, we had some price action up in these weekly and monthly rat zones. You can see here once again today, price pushed into those levels and then came back out. It's just something to note that if this rat zone is the weekly high or monthly high, you might look for a big reversal, and you can see we had that a couple of times. Just something to add to your, if you're a rat trader, just something to add to your, let's put that into your perspective, to what you look for, to what you consider. And even if you're not a rat trader, you might always want to consider, is price near that monthly, weekly high? Is it near that monthly, weekly low? Is this where it could make a big move in the opposite direction? So once again, we're looking at those ranges. And if you're a buy zone trader, high to open, 26 pips. Today, open to low was 62. So once again, trading away from the open can be profitable. Just a simple trading screen here. You can see the 3 levels easily, put a 3 ball in at the bottom. Price has moved up. We've got an inside bar here on M5, and price has broken that high and low a couple of times. You know, one of the things about trading that you guys have to be careful about, you fellow traders, is putting too many things, too many triggers into your trading. Because what'll happen is, let's say you're a rat zone trader, so you're trading a rat zone, and then maybe you start to trade some other triggers. Well, then you miss a trigger on the rat zone. What's going to happen is you're going to look back and see, oh, what, that was a trade that would have made me profitable. And that's what you want to avoid. So sometimes it's best just to stick with the 1 or 2. So like if you're trading a rat zone and maybe you're using the wick zone, trading out of a wick zone that's in the rat zone, maybe you're doing an hourly buy zone trade in the rat zone, those are okay. But then if you start to add some other things, especially squiggly lines, it can really mess you up. So try not to do that. As you can see right here, price is trying to break out of the previous M5 high. Once again, we're in the rat zone, looking for triggers to go long. And here, simple price action trading chart. Just trading when price comes to this horizontal line, the Walmart line here, it hit the 1300. I believe you had a low at 98. You could have only picked up a pip. So you can see this range is compressed. Very, very compressed. And here on the semaphore range, you can see between the 1 ball and the 3 ball, 69.8 pips. We are now 10.8 pips away from the most recent semaphore here. So you might look to go long here at the 33.10 this hour, or maybe if it breaks across that open price. I think it's tried it twice so far. I think it was 35.05 open. Where was that? I think it was right here was the open. Yeah, and you can see it's tried to get above that open a couple of times. And here we go again. Nothing spectacular here. We're just watching the price. So that's pretty much it for the week, fellow traders. Coming up next week, we'll probably talk more about, various aspects of trading, not necessarily, talking about a method in particular, more about the psychology and, getting your mind in the place it needs to be so you too can be profitable. So I hope you all had a profitable week. Hope you have a fun and safe weekend. And when you come back next week and you sit down at your trading platform, always remember and never forget it's not what you trade, it's how you trade it. So drain the banks. This is the Rumpled One, over and out.